We all watch movies on Netflix. We use Facebook regularly. We use Twitter. But have you wondered if you can even be part of this journey and create wealth by owning some of these shares? Yes, you can now buy these shares through international mutual funds. Hi, I'm Prashant Mahesh from the Economic Times, and today we'll talk on how you can invest in international mutual funds. Just like you invest in domestic mutual funds, which buy companies which are listed in India, like a Reliance, like a Infosys, a TCS, a international mutual fund similarly invests in the shares of companies that are listed outside India. For example, they will invest in shares of Netflix, Amazon, Facebook, Twitter, Louis Vuitton, and so on. Many of these funds actually are coming to you in the form of fund of fund schemes, which means that the underlying schemes of these foreign funds invest in foreign markets and you can buy these funds in India. Well, one of the reasons which we give for investing in international funds is to geographically diversify your portfolio. You would have noticed that all your investments that you have, basically, be it a fixed deposit, be it a direct equity share that you earn, a mutual fund, or even real estate, is all in India only. Now it is such that there are phases when the Indian economy will go through a rough patch, or while other economies will continue to do well, and vice versa. And hence, it makes sense to diversify some part of our portfolio globally. Also, there are many large companies in areas like automobiles, technology, internet, which are based in US and Europe. Many of these businesses are not listed in India. For example, while we use Amazon regularly for delivery of goods, but to buy an Amazon share, you have to go abroad. Similarly, Apple, Amazon, Alphabet, Tesla, and all these companies are listed abroad, which we can buy through some of our international mutual fund. Secondly, we are all increasingly opting for international holidays. Our children are going abroad for higher education, and many of us are buying international products basically. We like the services of these companies and often feel we can invest in them and participate in the growth story. The way to doing it is through buying an international mutual fund. There are many opportunities today available to international funds for Indian investors. You can invest in a fund which is investing in the stocks which are listed on the Nasdaq 100, or you can buy a S&P 500 fund, a US based fund, a emerging market fund, even a technology fund, or even a region specific fund like a China fund, a Japan fund, or a Brazil fund. Also, there are some theme-based international funds which invest in, say, themes like energy, consumption, and commodities, which are available to Indian investors. So the simplest fund that you can buy, could be an index fund like the Motilal Oswal S&P 500 index fund, which is a replica of the S&P 500 index. Then you have a number of funds which replicate the Nasdaq 100. You have the Motilal Oswal Nasdaq 100 fund, or the Kotak Nasdaq fund of fund. Then you have some US based funds, like the Franklin India US Opportunities Fund, or you have a fund like PGIM India Global Equities Fund, which invest in markets across the globe. Then you have a couple of funds which invest in emerging markets, primarily like China, Asia, which are PGIM India Emerging Markets Fund, and Edelweiss India Emerging Markets Fund. You could also invest in a pure technology fund like the Edelweiss US Technology Fund of Fund, or you could even invest in just a FANG Plus fund of fund which Mire has got, which invests in just top 10 stocks of the FANG index, FANG Plus index. And so there are various ways in which you can participate. If you want to go for a particular country, you have a couple of funds which are focused on just the Chinese economy. You have the Hang Seng Bees, you have the Axis Greater China Fund, and the Edelweiss China Fund, which you can use to participate in China. You also have a Nippon Japan Fund and a HSBC Brazil Fund, where you can invest in those particular economies. So now you can use a mix and match of these funds, or some of these funds depending on your risk appetite and your ability to invest in international markets and participate in the growth story of these companies abroad. Well, there are phases, when some of the international funds do better than the Indian funds, and there are phases when some of the Indian funds do better than the international funds. So essentially, in your equity portfolio, you should have a mix of both Indian and international funds. Typically, to start with, you could start with about 10 to 20% allocation to these international funds. Typically, we have seen over the last 3-year period, these funds have given investors a return in the range of 20 to 30% annualized, which is equivalent to what the Indian funds have delivered. And over a 5-year period, they have delivered 18 to 25%. So it helps you to diversify geographically, and at times it also helps you to give high return. So the process remains the same. Buying it is very simple. You can buy it in Indian rupees, just like if you are an Indian investor, just like you buy any other mutual fund. You can either fill up a form, write a check, and submit it to the fund house, or you can invest online, like you invest in any other fund, or you can do it through any of the portals which offer mutual funds basically, and you can even do a lump sum investment. You can do a SIP. You can do it, structure it the way you structure your domestic mutual fund. You have to remember that from a taxation perspective, international mutual funds are treated on par with debt mutual funds. So the taxation rules what apply to debt mutual funds apply to these funds also, which means that for a holding period of less than 3 years, you will be required to pay short-term capital gain tax on profits in line with your tax slab. However, if you hold it for more than 3 years, which we suggest you should since you are a long-term investor, you will get indexation benefit, as the profit will be treated as a long-term capital gain, and post-indexation your gains will be taxed at 20%. In times like COVID, we have seen that markets have been volatile. There is COVID phase going on in one country while things are absolutely fine in the other country, and so on. So keeping these things in mind, it makes sense to start diversifying your equity portfolios. One should make a start and at least have 10 to 20% of their portfolio in international mutual funds over a period of time. Before investing, please talk to your mutual fund advisor. And for more such updates, kindly keep watching this space. Thank you.